July 23rd, 2022. Nathan from Queens. Ultimate Traders on Reddit. This is video 2, State of the Market. I don't care what other furrows tell you. I don't care what analysts say on TV. I don't even care what money managers say. I don't care if they're even managing $1 billion. I don't care if it's Kathy Wood is managing, $20 billion. I don't care what they say. I don't care what they think. To be honest with you, I'm just as good as them, if not better. I don't care if they have a whole team. The reason why I'm saying that is the last week and a half on CNBC, we had a terrible reading on CPI on July 13th, 2022. And a lot of people are saying that was the bottom. That was it. We've hit the bottom. We're on our way up. I don't care what they say. If that's the case, I'm not saying it could not have been the bottom. But it's not a certain point on the index. It's not a certain price on a stock we're looking for. The stock market is a live auction. Every single morning is a different sentiment. Sentiment changes during the day. And I think I even did this on a video a couple of, maybe a month and a half ago with Apple as an example. Okay, we're not looking for a certain price. I'm looking for data to be better. So what I'm telling you is they are wrong. They are wrong saying that we've hit the bottom. Now, the bottom I think was 10,500 middle of last month in June. And I can see us making newer lows. I wrote on Reddit, right now a safe range on the NASDAQ is 9,500 to 10,500. A safe point on the S&P is 3,300 or 3,600. This is an auction. Obviously, we can trade higher, but it's not safe because if it's higher, we have to get ready for rug pulls. A rug pull is when we get a big slap on a stock or big slap on an index. To me, a daily crash on the index is 4% or more. When you get more than 2%, it's a sea of red. Sea of red is 2%, daily crash is 4%. And the way the market is right now with retail so heavy in this, we can get a lot of daily crashes or lots of sea of reds. So unless you're prepared for that, I can see us going a lot lower. 9,500 to me is the bottom on the NASDAQ for now. And for now, the low on the S&P is 3,300. Now, I keep saying for now is because next week, July 27th, we're going to get a rate hike. Now, I would not be shocked if we get 1%. Now, everyone's saying we're going to get 0.75. That's said and done. We're going to get 0.75 or more. September 21st, we're going to get probably either another 0.75 or even higher. Now, no one is saying that. Everyone is saying 0.75 and then 0.25 or 0.50. I'm saying, Nathan from Queens is saying that is not happening. Why? Inflation is rising through the roof. 2 weeks ago, we had the highest print, 9.1 in 41 years. Last month, it was we got a CPI of 8.6. So did it peak at 9.1? It could have peaked at 9.1, but we're not dropping fast. And we're not dropping fast. That means the Fed is going to raise rates. Now, I did another video of what this is to like 2000. What this is to like 2000, the dot-com bust. So this is very similar because we're going to get 3% more or more of rate increases within 1 year. And that's going to be a liquidity crisis and it's going to crush earning. So this week on the 27th, we're going to get a 0.75 or above. July 28th is the first readings estimate on the second quarter of GDP, which I expect us to be in a technical official recession when you get 2 straight quarters of negative GDP. Now, that doesn't mean that it can't be worse. You see, we're getting earnings this past week. So last week started coming off with some earnings. Even Morgan Stanley missed. JP Morgan missed. Bank of America missed. Wells Fargo missed. Citibank actually beat. American Express actually beat. Intuitive Surgical missed by a mile. Snap didn't even miss by a mile. Snap took away guidance though, and Snap is way overvalued. Tesla window dressed the earnings. They met on top line, and without the regulatory credits, met on bottom line. The margins drop. What does that tell you? Does it tell you the earnings are going up or earnings are going down? What do you think is going to happen on the third quarter in October? Now, what if you're bullish? What you want to hope for is that analysts revise earnings down, and then we start beating earnings on the third quarter or the fourth quarter. But I'm not here saying that's going to happen. I'm not saying it's not going to happen, but the data is suggesting that we're going to miss earnings. I want to bet big on it. Video 3, I'm going to do a video what my plans are. But like I said, I can't guarantee that we're out of it in October. But I don't see anything good. And you can comment on YouTube, comment on Reddit, comment on Twitter if you're against me. I don't mind if you're against me. I want a meeting of the minds. I want people to brainstorm. Tell me. I don't care if you're on TV. I don't care if you're a money manager. I'm watching CNBC, and everything that tell me that that's good, I disagree. And these are money managers, billionaires, multimillionaires, and I'm disagreeing with them. And on Twitter, I am telling them I'm disagreeing. And some of them are blocking me. Some of them are even blocking me. So, I mean, that's funny. I don't block anyone, especially if you have something meaningful to say. If I say something, because I'm not one of those people that are going to curse you out. So if I say I disagree, that shouldn't be a reason why you're blocking me. But whatever, I'm not here talking about that. What I'm saying is I don't see anything good until October. And I'm not saying October is going to be good news. I'm saying we're in worse. In March, we were at 0.25 interest rates. All right, March 16th, we got a 0.25. Then we got a 0.5. Then we got a 0.75. All 3 rate hikes in a row. Right now, 1.75. We're going to get either, like I said, a 0.75 or 1.0 coming this Wednesday. We're going to get a 0.75 in September or higher, depending on CPI. Inflation is roofing. Consumer sentiment is dropping. Profit margins are dropping on companies. So the state of the market is worse now than in March. Now, I wouldn't say that the market is going to crash, because earnings are just missing. Not everyone is missing by a mile. If everyone's missing by a mile, my feeling on the market is going to drop. But right now, NASDAQ, 9,500 at 10,500. S&P, 3,300 at 3,600. Now, this week coming is going to be huge on earnings. We're going to get Google, Microsoft. We're going to get a lot of mega caps. And Meta. And Snap on Thursday was a bad preview of what can happen with Google and Meta. Now, those stocks are cheaper, and I'm going to get into that in video 3. So I can't see them dropping a lot because they have value, and that's what I'm going to discuss in video 3. But video 2, the state of the market right now is worse now than in March. Worse now than in March. So why are we going up? FOMO? People on TV trying to tell you that things are getting better? Things are not getting better. Will things get better? Yes, they will. But I don't see that right now. The bond market is trying to tell us that interest rates are going to drop next year. So the 10-year yield has dropped below the 2-year. When you get mortgages, they usually base it on a 2-year, what the 2-year U.S. Treasury bond is trading at. And it's higher than the 10-year. That gives us a signal that recession is probably happening, and because it's happening, rates are going to drop. Now, I could understand the market kind of rallying on that, but you don't want a recession when inflation is going through the roof. That's called stagflation. Stagflation is a killer on the stock market. Now, I didn't mention stagflation because I want to be confirmed by data, and now the data is telling me we're in stagflation. I'm telling you, you do not want that in stocks. Do you? I've been trading forever. whatever. You can pass this on to other billionaires, furrows, whatever. I don't care. Pass it on to them. Because I'm the one that should be getting paid, not those bozos. And I don't care if they even see it. Because people that are super bullish, if they can't give me a reason why they're super bullish, to me, that's a bozo. You know, I can have a debate, a nice debate, and say nothing bad because I'm not even one of those people. I don't even curse. But tell me why. I have yet to hear something why the market can go up right now. I'm hearing stuff on CNBC and they're bullish, talking about 3 months from now, 6 months from now. But you don't want to trade today on 6 months from now, right? You're trading to try to make something near term. If you're a long-term trader, don't open up your account, don't look at it, and just do index funds. Do the S&P 500. It's up 8% since the 50s, 8%. Do the Dow Jones. The Dow Jones has been up about 5.5% since about 1900. Just do that. Don't open anything and just keep going. Don't open your account. You're going to go crazy. So that's video 2, the state of the market. Be careful. It's worse now than in March. Will it get better? Yes, I'm saying it's going to get better, but we're a few months away. So do you want to buy stocks now, or do you want to buy it when the news is turning? For me, I want to buy stocks when the news is turning and we're getting good, better data. Because what if we don't get good data in October? Guess what? We might have to wait for fourth quarter earnings at the end of the year, or, well, that'll be January, the third week of January, or we have to wait for CPI, inflation, to really drop, and the Fed, Powell is done raising rates. So that could be months from now. So if you want to buy now, good luck.